You just received an IRS notice for CP2000. The IRS CP2000 mimics an audit for procedure. What this means is that there's really nobody looking at your actual account. Instead, what happened procedurally is that you filed your own income tax return. Upon filing that tax return, there was something missing. There was some reported income that was not included on the original tax filings. So this could be anything from an extra W-2, when you cashed out retirement income, 1099-R, maybe some rental income that came on board through a 1099 miscellaneous, or maybe you're an independent contractor and it was a 1099 non-employee compensation, 1099 NEC, that was not reported on the original amount. What the IRS computer systems did was they read your tax return electronically read all the wage and income transcripts. What the IRS did was they added that extra income, added penalty, interest, and taxes. My name is Sergio Melendez. I am an enrolled agent Juris Doctorate. I have saved my clients millions and millions of dollars on behalf of the IRS and back taxes. Hey, I need a favor from you. Could you click like on this video and don't forget to subscribe to my channel? We're gonna have a whole lot more tax relief coming your way. The three different choices that you do have is one, you could just do nothing and accept it. And the IRS will gladly finalize this, send you to collections for payment, or you could make payment, throughout this whole process because you know the exact bill amount. But let's say you don't agree. And if you don't agree, you have to respond back prior to the close date, prior to the deadline. Because if not, procedurally, the IRS will finalize these changes, and the only way for you to appeal this is to go through the tax court. So it's important to stick to any deadline. And if you disagree, then you have to come up with your calculation and the reasons why you disagree. And this is common for a lot of people that are self-employed and get multiple 1099s, or if you get rental income and didn't fail to include the Schedule E. So in order to calculate whatever difference is in tax, and how we calculate it here at Semper Tax Relief would be the calculation through a 1040X or an amended tax return. But keep in mind, we only mark this amended tax return not for filing and processing. We mark this as do not process and for calculation only, the correct calculation of tax. And what we really do is come up with the additional tax schedules or the tax forms that should have been included on the original tax filings. For example, let's say you were self-employed and you did not include a 1099. Because the 1099 NEC should be for gross income. This income includes not only for income tax purposes, but also self-employed income. And what we do is we calculate the business expenses associated with that self-employed income. So we draft a Schedule C, which is a business profit and loss. And the net business income on the Schedule C is then calculated on the 1040, which then calculates the income tax and the self-employment tax. But in addition to that, it also qualifies for the qualified business deduction. This is also quite common for a lot of crypto investors when now the cryptocurrency is now being reported on a 1099B. And this mimics similar to the 1099B is where a lot of the stock and brokerage accounts get reported for somebody. To combat this is we have to come up with a short-term capital gain or long-term capital gain, or also short-term capital losses or long-term capital losses. For each of these, we fill out the appropriate 8949, which then flows through on the Schedule D. Then the Schedule D amounts go on the 1040. So that's one of the first things that we do is we evaluate to see the type of income it is it taxable, are there offset expenses or other deductions against that income, and then what's the final net amount. And of course, if there might be a difference in tax that's different from the IRS calculation, or sometimes it could be a difference in refund for somebody. But what happens if you're in a unique situation where it is taxable income, it is a W-2, it was not on the original tax filings, and somehow, some way didn't make its way? What we would take a look at then is just the total of the circumstances to say, why was this excluded? How did you file your tax return? And if this was the case when there was a missing W-2, we would want to ask, what's the reason why that this W-2 was excluded? If this comes to say when you provided all the documentation to your tax preparer, to your CPA, whoever does your tax return, and they didn't exclude it because maybe it was their mistake or maybe they did not understand, then maybe you might be responsible for the additional tax. Now, the penalties that comes in could be pretty stiff. The penalties that could be associated could be the failure to pay penalty and also the substantial understatement penalty, which is 25%. So based upon your circumstances, we could request abatement of penalties. That means we agree with the tax amount. So if your additional tax amount, as an example, is $10,000, but the amount you're being billed for in penalties is going to be an additional $2,500 for the substantial understatement, plus an additional $2,500 for the failure to pay penalty. Maybe we could at least make a request for the penalties to be waived because it was not your fault and there was reasonable circumstances that you took every single step to be reasonable to make sure your taxes got done on time, that somebody you relied upon failed to act, failed to do the correct thing. Or another circumstance could be that you moved or a house got foreclosed or something like that happened, and the people that normally give you the 1099s didn't have your updated address, so they mailed it to an old address or your mail was not forwarded. You simply did not receive it. And because you didn't receive it, it might have been excluded. Those could be reasonable causes as far as for the penalties not to come into play. But there's a big problem with the CP2000 unit. This IRS unit is extremely delayed. There are times where we submitted packages with substantiation, with proof, and there has been no response. And unfortunately, they treat that as rejecting it all, and you get the finalized changes that come through with a notice of deficiency. And when it comes to the notice of deficiency, there's only one way to appeal that, and that's by petitioning the tax court to hear the case of why the IRS did not respond to everything submitted. So what we do is when we submit a packet to the IRS where we're challenging the amount or requesting abatement of tax, we always make sure that they did receive it, and if it's reviewing, and by when we should have a contact date. We always document our conversations with the agent's name, badge number, and the date of when the conversation occurred. Because the IRS is very notorious for saying one thing and then doing another. For example, if we submitted a packet to the IRS that proves that the client had self-employed expenses, that the real tax shouldn't be whatever they're claiming, instead we submitted our own calculation, but there was no response. And when there was no response, if we called and talked to them once a month for 3 months, and all of a sudden we got in the mail the finalized changes, then we would have to include our documentation with every person that we came in contact with the IRS. When the IRS reviews the response that was submitted, they analyze to see if it is accurate, it is correct, and it does have the right substantiation for the changes that we're requesting. The IRS will then finalize their changes and submit the new calculation that includes the corrected tax, interest, and on top of that, there could be penalty abatement that could be forgiven because of the reasonable cause or the reasonable excuse that came up of the reason for the difference in tax. Everybody's situation is different, and the IRS too. Their expertise, knowledge of the individual agent working the case is really different. And with the hardships that they're going through right now at the IRS, it's very difficult for them to process faxes that are coming in or mail packages that are coming in, which is why we see that increase in delays and we see more of the notice of deficiencies. Now, the IRS does not mind that because, of course, if they make the changes finalized and you do not appeal, that means that they're just collecting a whole lot more money. So what happens if you do really owe the money and if you have a W-2 or a 1099-R that you did cash out? And now because of that, you have a very large tax debt, no matter what. Now, based upon this large tax debt that you do have, you do not resolve this with this particular unit. You would have to wait for this procedure to completely close off before you're able to just tack on the collections case that comes afterwards with the IRS of owing the tax balance. If you do have a large tax debt because of this procedure, even if you did respond back and even if it's now the right tax and it's just a tax amount that you cannot afford, this particular unit does not handle payments, they do not handle collections. All they do is handle the procedure of making the changes on your behalf. The balance due that you do the IRS is then handled after with the collections department or with the offer and compromise program or however it is that you're settling out the back taxes.